rising yen, shifting markets, the global fallout of Japan's rate hike.
Hello, welcome to the Wealth Starting Line. Don't forget to like, comment, share, and subscribe.
All right, welcome back. Today, we're digging into a massive story that's shaking up the financial world. And yeah, this one could absolutely rock your investments, from stocks all the way to crypto. And believe it or not, it all comes down to a single move from one country, Japan. We're talking about the potential end of the world's biggest and, for a long time, most profitable trade.
So, how could one country's decision cause such a stir? I know, it sounds a little dramatic, right? But trust me, it's not. See, for decades, Japan's been like this quiet, underground spring, pumping trillions of dollars into markets all over the world. And now, well, that spring might be about to run in reverse. Let's take a look at the machine behind it all.
Okay, first up, let's talk about Japan's cheap money machine. To really get why this is such a big deal, you have to understand the engine that's been quietly humming along in the background for years. This whole thing kicked off way back, after Japan's economic bubble burst, leading to what they called the lost decade. Their solution was pretty radical, and it lasted a long time.
And at the heart of this entire story is this number, basically zero. For what feels like forever, the Bank of Japan has kept its interest rates hovering right around 0%. What does that mean? It means borrowing money in Japanese yen was incredibly, ridiculously cheap. We're talking practically free.
And you know what happens when money is basically free, right? Investors don't just let it sit around collecting dust. Nope, they put it to work. And in doing so, they created what's probably the biggest, most popular investment strategy on the entire planet.
It's got a name, of course, the yen carry trade. And it's the engine that's been driving this whole phenomenon. The idea behind it is actually pretty simple, but the sheer scale of it, it's just mind-boggling. We're talking everyone from giant hedge funds down to individual traders getting in on this.
So let's break down how this free money formula actually works. Look, imagine I offered you a loan at 0% interest. You'd take that money, you'd invest it in something that pays a return, like US stocks, and then you just pocket the difference, right? That is exactly what global investors have been doing, just on a massive scale, with trillions of dollars.
So this global party, fueled by an endless river of cheap Japanese yen, has been raging for decades. But it looks like the DJ is about to cut the music. The era of free money might just be coming to an end.
So the big question is, why now? After all this time, why is the Bank of Japan even thinking about raising interest rates? Well, for the first time in nearly 2 decades, they're actually signaling they might do it, and even a tiny little hike would be a massive change in policy. It's the one thing that could trigger this whole global chain reaction.
And that brings us to the really juicy part, the global ripple effect. Because, let's be real, when you turn off a money tap that the whole world has been drinking from, you don't just get a tiny drip, you get a shockwave.
The pros are calling this process the Great Unwinding, and reversing a trade involving trillions of dollars isn't as simple as just hitting an off switch. No way. It's more like a chain reaction, right? One domino falls and it knocks over the next and the next, from currencies to stocks, all the way to crypto.
Okay, so let's walk through exactly how this works. First, Japan raises rates. That makes the Japanese yen stronger. All of a sudden, those super cheap loans, they're not so cheap to pay back anymore. So to get the money to cover those now expensive debts, investors are forced to sell the stuff they bought. US stocks, real estate, Bitcoin, you name it. And that selling pressure, well, it could push prices down everywhere.
And hey, people are already connecting these dots in real time. You can see it in this comment here. The idea that even just the rumor of a rate hike might be behind some of the recent wild swings in assets like Bitcoin. It just goes to show you how tuned in the entire global market is to every little whisper coming out of Japan.
But of course, nothing in finance is ever that simple, is it? There's a huge debate raging about how this will all shake out, which brings us to what people on the street are saying, the counterarguments and the skepticism. All right, so here's the main argument from the skeptics. They're basically saying, look, how much can Japan really raise rates? 0.25%, maybe? The gap between their rates and, say, US rates will still be massive. So they argue it's just not enough of a change to make everyone rush for the exits and unwind this whole trade.
And then you've got the whole geopolitical angle, which is fascinating. The thinking here is that this isn't just an economic decision for Japan. I mean, would the US really just stand by and let Japan trigger a potential crash in American stock markets? Some people think there'd be immense political pressure to keep things stable.
Okay, so we've been talking about trillions of dollars and global markets.
Let's bring this all back home. Why should you care about a decision being made halfway around the world in Tokyo? How does this actually affect your wallets?
Let's boil it all down. First, it's a huge reminder that the financial world is way more connected than we think. Second, the end of Japan's cheap money could mean a lot more volatility in the markets, more ups and downs, and that affects everything, from your 401k to your crypto portfolio. Ultimately, it's a powerful lesson in how major global events can hit you right where you live, in your wallet.
And that leaves us with one final big question. You see, for most of our adult lives, the global economy has been running on this fuel of super cheap money. That whole era, it really looks like it's ending. So the real question isn't just what Japan will do next, it's whether the entire system is actually ready for what comes after.
Thanks for watching. Don't forget to like, comment, share, and subscribe. See you next time.